Markets have been on a roller coaster this week with retail earnings, Fed talk, debt limit negotiations. Those have been the big drivers of action. Let's talk about how to play this. Ken Mahoney is back here with us, Mahoney Asset Management CEO. Ken, so let's start with your two buys. We know certainly tech has been the outperformer since the start of the year. You've got two picks in this space. First up, Nvidia. I thought this was a bit surprising given the run-up that we've seen over 100% since January 1st. What's going to keep this momentum to the upside?
Yeah, look, the earnings come out next Wednesday, the 24th. Again, I don't have a peek at them, but I think the market's getting behind on the earnings. I mean, this reminds me of that kind of hockey stick growth that we saw with Tesla a few years ago, that valuations matter, but they don't if they're going to grow the top line. AI is a big thing. This is going to dominate. Before I said, hey, Fed funds and all that's probably the ninth inning. Well, for AI, we're probably more in the second inning, just the beginning of the cycle. Hey, it will have its ups and downs. Recognize the stock is going to parabolic. The tactics that we kind of use is kind of buy and hold maybe a half to 2/3, and maybe trade around that, sell some calls and so on. But at the end of the day, this is where the leadership's going to be. And I still believe there's a lot more upside with Nvidia throughout the rest of the year, even though the stock's already doubled this year.
Yeah, I can't think about how many times we heard AI in earnings calls, but when you think about those who have been leading, obviously Nvidia with the chips, Microsoft's certainly been a big leader on that front. You know, it's interesting, we heard from Meta this week talking about having to own the entire stack to be able to scale AI and win in this space. How does Microsoft present an opportunity for you in terms of that and the competition that is just gearing up right now?
Look, Microsoft, thankfully, is not a one-trick pony, right? So it has everything from gaming, all the different verticals, from cloud to all the different software. You can't go without software with Microsoft. And then in addition to that will be AI. And if you look at Microsoft the last few quarters, they beat earnings and they raised guidance. Those same thing for on the video. So these are the companies you always want to look for. Those companies that can beat estimates, raise guidance. I think Microsoft's going to take a little chunk out of the dominant space for Google search. Even a small market share goes in the right direction, and you get all those many verticals with Microsoft.
Ken, more broadly speaking, though, when you take a look at the run-up in the tech sector, there was a Bank of America fund manager survey out earlier this week talking about how being long tech is one of the most crowded trades right now. Why aren't you worried about those valuations?
Right. So, everybody complains about being narrow leadership. And it is. I mean, that's just the hand that we dealt with this year. I mean, this is a kind of a bull market and a bear market. Pretty much, the Dow's unchanged for the year. The Nasdaq's up 20%. You can go and hide in PEs of 6%, 6 or PEs of 8, it seems, and they'll still be trading there. Yes, you're paying a higher multiple, but you're getting a higher growth rate. And to me, if it's going to be narrow leadership, be with the narrow leadership. If it's not going to spread out, it's not going to have strong breadth the way it's been shown. Stick with the leaders. I mean, that's kind of how we've been trained. Look at the best industry, the best stocks in those industry. Yes, they'll be volatile, but you're going to be more than compensated for that volatility.
Let's talk about the other two stocks that you've pointed out to avoid. And I want to talk about KRE. This is an ETF for the regional banking sector because, yes, we have seen just the volatility there. It feels like there's starting to be a bit of a differentiation between the regional banks. Is it your sense here that we've hit the bottom, or do you think there's still more cracks to come when you're looking at some of the other names in the space?
I think there are more cracks to come. The reason I picked out KRE and that's selective, let's say, banks, is that, if you wake up one morning like PacWest or some others and they're down, 10%, you go to CRE, next thing they're down 6%. They go down in sympathy. So I just think there's better other opportunities. As I mentioned, AI is all the rage for all the reasons. There's other pockets of strength, semiconductors, of course. So to be in this space, regionals, you're going to have strong stuff. And it's really hard to pick through what's going to make out the other side, which ones are in trouble. But every time there's a problem with just one of them, it comes back and hurts the regional. I think you said earlier, for the week, Free had a good week, but you saw it close at the low of the day. And I think still there could be a couple of ones out there, and they always take it out in this ETF, it seems.
Ken, the other pick that you suggest that people avoid is Anheuser-Busch. We know that a lot of people have been closely watching the sales of Bud Light, given the controversy and what has happened over the last several weeks. Do you think there's more downside risk ahead, it sounds like?
Yeah, it could bounce a little bit. I mean, it's gone down so hard. I mean, it was in a high 60 before the controversy started. Below 60, I think it landed sub 60. It could bounce a little bit. It could be a short there. The sales numbers are pretty amazing. 20-something% week over week. I didn't know it was going to be so sticky, but it is very sticky. And it looks very tempting. Say, hey, the stock was 70, and because of controversy, that will blow over. I'm not so sure it's going to blow over that quickly. It still remains sticky, and therefore we would avoid that stock. As tempting as it may look, being down so much in the last couple of weeks.
Ken Mahoney, Mahoney Asset Management CEO. Good to have you on this Friday.
Great, thank you. Have a great weekend.